Hi guys, welcome back. It's LSP. It's currently the 12th of February 2021. Welcome back to Forex Trading episode 11. Stick around. At the end of the video there's going to be a lesson. We're going to continue to evolve what we're discussing on the Euro JPY. It's not specific to Euro JPY, but we're using the Euro JPY for our lessons. As always guys, if you find value in what I am doing, please give the videos a thumbs up and subscribe to the channel if you're new so you don't miss any future updates. So I'll just do a quick rundown of the usual suspects and then we'll get straight into the session, or lesson should I say. Over the weekend I'll do a look ahead as I did last week as well, so look for that on Saturday. So this is what we want to see on Euro USD. This is brilliant. It's exactly what I wanted to see, and now that now that we're seeing this, it gives us a very good indication going into next week. And on Fridays, just to give you a heads up, what I like to do is as I trade throughout the week and as I'm analyzing the markets, it's a constant flow. You adjust, you're always adjusting throughout the week. Remember, we, the trader, we're always having to adjust as we're going through the week. We sometimes start the week with one idea and we end the week with something completely different, because we have to use what the market's telling us, and then we kind of, how can I say, sorry, my mind's just gone blank. Yeah, we're constantly self-adjusting, based on what the market's telling us, because ultimately these aren't our ideas. Yeah, we're using the data that we're seeing in front of us. We're staring at a chart. If you take this chart away and we're just looking at the price, for example, so this doesn't exist and it's just a price point, that doesn't tell us absolutely nothing. It tells us nothing. Yeah, this is the data that we use, and we try to ascertain what we're seeing, and it gives us our ideas, our clues, and then we use that information, to come up with trade ideas. So when we look at the daily like this, we've already discussed this area up here, the nice response down here, and if we go over to the hourly for a second, we can see today we had a really nice drop. Okay, and I think I'll go down to the 15 actually, because it's a little bit easier to see. But you can see we had this nice drop. Okay, and this beautiful reversal. Okay, very similar to what happened on the pound USD trade that I took this week. This drop, this negation, this upward pressure. Everybody's thinking, oh, it's going, down. It's been going up for a while. I'm going to short, and then obviously you get this really nice reversal. Pretty much negates the entire down move, and then it stabilizes up here. And then when we go back to the daily, now we know what that tail is, and it kind of makes sense, right? This tail here. So for me, going into next week, I'm absolutely looking for higher prices, yeah, and ultimately I'm looking for this high here to be traded to. And because we've eaten into this area of liquidity and absorbed some of this liquidity here, I'm expecting this to be traded to and through, okay, to go to the other side of this liquidity pool and start to eat into some of that. So there's plenty of range. There's absolutely no rush. And I'm going to say now this is probably going to be the focus pair for next week, but we'll see how we go. All right, pound USD starting to accelerate nicely, man. This is exactly what I wanted to see. Maybe I'm just getting lucky, guys, eh? But really nice acceleration this week, and I really want to see it just pop now next week straight into this, and we get a nice little fade. So this maybe a couple of weeks to go, but as it starts to grind towards that, maybe there's something to take as it's going into this area as a long. But the idea is there. We know what we're looking for pound USD, so it's on the radar. Pound Japanese yen, same sort of scenario, but again, this is taking its time to speed up, and it may, just judging by this, we may start to accelerate closer towards the highs as it starts to reach for some liquidity. But we're just going to have to wait and see on this. But we're going to assess it as it happens. But the same scenario, I want to see it really go. I've got no interest in trading this on the way up, though. Yeah, with pound USD I have, but on this I've got no interest in trading this on the way up. I just want to fade it if it gets up here. Pound Aussie dollar. Yeah, I'm going to skip past this one. Yeah, there's nothing there, guys. I'm going to skip past this one. USD Japanese yen, same, skipping past that one. USD CAD, possible for next week, maybe. As I mentioned yesterday, yeah, this slowdown is because it's Friday. Do you know what? I've got a funny feeling next week we're going to open, maybe just start to grind lower straight away, and get some upside, especially with Euro doing what it's done on Friday today. We may just start to bleed lower on this, which may offer an opportunity to take something on this on a short. So, yeah, it's going to be an interesting week next week, actually. A very interesting week, especially for analysis and education, so definitely stick around for that. Gold, a little bit of relief today. 1821 again. You know, I keep saying it, and I apologize that I'm, you know, coming to these charts and I'm just kind of skipping past them because there's not really much going on. But you know, this is trading. Sometimes it is boring, you know, and that's how it should be. You know, I need to see a price. I'm not chasing it. I'm not forcing it. I want 1750. If gold's not going to give it to me, then that's fine. I've got no problem with that. But I have a plan, and I want to execute the plan according to my parameters, not according to what the market, you know, wants to do. Because the market's got no interest in me. The market just wants to take my money, right? And that's how I see it. I'm at war with the market. So, you know, I want to win and the market wants to win, and I'm not going to give the market an opportunity to take my money in any way, shape or form, whether it's I'm using the market as a tool to invest in physical gold, or whether I'm using the market as a tool to actually trade the cash price. Yeah. But I want 1750. So, you know, again, we're just going to keep bypassing them. We'll see how it goes. And again, silver, just want to see something spectacular on silver. In the long term, you know, just as a quick side note, I do believe silver is going to pop. You know, and I do believe, you know, silver is going to be at least 35 at some point. It is the poor man's gold, and it's definitely worth investing in physical silver. This isn't trade advice. This isn't financial advice. It's just advice. Yeah. If you have the physical gold or the physical silver, you know, you can't really go wrong. Yeah, I mean, you can invest in metals and get it badly wrong, but it's unlikely when you're investing in small amounts. That's what I'm saying. Yeah, when you're buying kilos and things like this, you know, kilos of gold. I don't know if anybody's got money to buy kilos of gold, but that's different. But when you're investing in coins, which is what, you know, I would suggest, because they're capital gains free if you're buying in the currency of your country, or at least over here in the UK, you know, sovereigns and, you know, Britannias, things like that, they're capital gains free, and gold obviously, you know, is VAT free as well. So, you know, it's a good investment, you know, and it's proven itself throughout the years. So it's not a bad idea. So that's that. Just a quick run through Euro USD, Pound USD, and I would say the USD CAD. They're the three main focus pairs, with the Euro basically being it. I think that's the one that's really going to go next week. So there are focus pairs for next week. Euro main focus, and then Euro JPY. Okay. Last time we discussed this in the previous lesson, I kind of zoomed right in and I said, does it look bullish or does it look bearish? And then I zoomed out a little bit more and I said, now does it look bullish and does it look bearish? So I just want to kind of carry on with that theme. I want to give you guys something to think about over the weekend. When we sit down as traders, okay, and we're looking at charts, we are responsible for everything. And I'm going to keep banging on about this. And you know, if it's getting old, then I apologize, but this is just how it is, okay? We, the traders, are responsible for everything that happens in our trading, and I'm going to prove this to you today, okay? And I really hope people have stuck around for this lesson because it's going to be an eye-opener for you. You look at this chart, and I've deliberately zoomed out the exact amount, right, to get my point across. You see this explosive move here, which we made a note of, and if you've watched all the previous lessons, you know what this is. And then obviously it started to grind higher, then it's been going sideways ever since. But when you look at this chart, this looks relatively bullish, yeah? And you can see this nice pop here, then it consolidates in a nice tight range, it drops, clears out all the liquidity here, rebalances, starts to grind higher, just shy of the high, comes down, higher low, okay, and then starts to grind towards the high just here, okay. And these 2 points that I made a reference to, the first one dips into, buys, comes all the way up, absorbs most of the liquidity here, okay, comes down, okay, the tip end here, pops, comes down, okay, absorbs more liquidity here, and then starts to grind towards the high. So you can see what it's doing, it's buying. It's picking up buy liquidity as it's going up. Yeah. So as it's coming up, it's already cleared out most of the liquidity in this area. So what's it likely to do if it pops? Yeah. It's likely to keep going. Yeah. This is really, really important. Now, that's based on what we've just looked at as the chart is. Now, if I do this, and I do the same thing again, because I know traders who trade like this. They zoom right in, and I'm going to show you why traders are responsible for everything that they do in the marketplace. Remember, we're all looking at the same data, right? But all we've done is just zoomed into the chart. Although the information is still there, the data is limited slightly. We've zoomed in. The chart's more, not exposed, sorry, but the chart's more stretched out. It looks different now. The interpretation of that data, yeah, is completely different to what it was a few seconds ago. Yeah. So when we're looking at this now, we're not seeing, I don't want to say the big picture, but we're not seeing a full representation of what could potentially be unfolding next week or the week after, for example. We're only looking at something that is in this, say, the next 2 or 3 days, for example, because if you see a breakout here now and it breaks out, most traders will see that breakout and think, oh, it's breaking out, I'm going to buy, for example, yeah, without thinking, well, wait a minute, what's going off over here? You know, maybe there's something over here that could potentially be stopping price. Maybe we're coming up into a massive monthly level, you know, of supply or a brick wall or of resistance, or however you want to term it, you know, or a liquidity pool that's already been raided, you know, and price is not going to find any liquidity there. So it's just going to reverse and start to come to the other end, i.e. down here, to take out some of this before it starts to go high. I mean, there's a million different scenarios, yeah. But when you're looking at price like this zoomed in, the understanding has to be based on what you're seeing like this. But again, when we zoom out and we get a better feel for where we're at, and we couple that together with the higher time frames, so say for example we go over to the weekly and we get a feel for where we're at on the weekly, and we say, okay, well, we know what the daily looks like, we've done our analysis on the weekly, we know we're clearly in an uptrend, we know we've had a turn in the market direction here after a nice downtrend like this, we've had a nice turn in the marketplace, now we're going up, now we're consolidating. So if you take the full range, we're in the upper quarter of this full range after a really nice turn like this and a continued, you know, up move, plus a nice pullback to pick up buy and rebalance a little as well. If this does break out, the most likely place that this is going to go is not just above this high, it's all the way up here. Yeah. So now we can start to add to our chart, and this is long-term ideas, guys. This is you know, because the reason I chose Euro JPY, by the way, is because it's one of those pairs that's very fluid in movement. You know, it's such a nice pair to do lessons on, yeah, because it takes time, it does a lot of different things, but ultimately it gets to where it needs to be based on order flow, you know, in the way that it absorbs liquidity. It's actually brilliant. So this is effectively where it's supposed to end up, yeah. And I know I sound really confident in saying that, but you know, that I've been doing this for a very long time, and I know what I see, yeah. So this is the lesson itself is about, again, going on the previous lesson of we, the trader, are responsible for everything that happens in our trading. And as long as we're working on us and working on viewing the market in the, the best possible way, using the tools to, you know, the way that we as, how can I say, the way we as traders view, because I'm an intraday trader, for example, so I wouldn't be using a tool that a position trader would be using. That's effectively what I'm trying to get at. We, the traders, have to be using the tools effectively based on our own psychological makeup, based on how we are as individuals, you know, and tying all of this nicely together. And unfortunately, a lot of traders don't want to hear all of this stuff. Yeah, they don't. Even now, there's been a massive consciousness shift, you know, when it comes to trading. Years ago, there was a lot, you know, the way traders were years ago is completely, sorry guys, the way traders, you know, were years ago is completely different to the way traders are now. You know, like for example, you see a lot of traders on Instagram and all of these gurus and everything else. That's not as prevalent as it is, or as it was back then. Years ago, it was worse. Nowadays, people know that's a load of nonsense and they don't really pay much attention to it, you know. But all of this boring stuff, people just don't want to listen to. Yeah, they just don't want to hear it. They just, you know, that's the one constant that's remained throughout the history of trading. People just want, give me a system that works so I can just make money. Yeah, that's it. They don't want to put the time in. They don't want to put the effort in. But the ones that do, they're the ones that make serious money. So I'm going to leave it at that, guys, because I have dragged this on a little bit, and I do apologize for that. But it is the weekend. I wanted to give you guys something a little bit more deeper to kind of have a think about. And you'll see we're slowly building on this canvas, and we're going to be adding to it. We're going to be working on it, you know, and it's going to be unfolding as the lessons progress throughout the weeks. Okay, so I'll leave it at that. As I said, I hope everybody has an awesome weekend, and I will catch up with you tomorrow at some point for the look ahead. So I'll wait for the markets to close. I'll do a look ahead, you know, for next week, which I'll do tomorrow. That will be posted, and I will speak to you in that video. Take care, and I will speak to you then.